Okay. I think we're all good. I think we've got everyone we need in here. If anyone's still coming in, then they can still enter. But I believe we should get started now. So 8:02 on this fine Sunday evening. I hope you guys have had a great weekend so far and getting ready for the markets when they open up next week. And we've got another cracker session for you guys. We're into the meaty part of our phase one session at the moment. So if you remember, we've had some previous sessions, of course, in the last few weeks, and the ones highlighted in green are the ones that we have already been through. So if you haven't seen the previous sessions, it makes sense to jump back into the YouTube playlist and make sure you catch up on them previous sessions. Once you've gone through them, then obviously this session that we're going through tonight will make it a whole lot more easier. So if you're brand new, please come back to the previous sessions that we've done. Without further ado, we shall get into our new session for this evening. So what is our topic for tonight? This is session number 7, and this is all about entering a trade properly. So, you know, we've gone through a lot of stuff in the last few weeks. We've gone through confirmations, we've gone through support and resistance, we've gone through identifying structure in the markets. But how do you actually look to enter a trade? Like, what is your entry based on? And that's something that we'll be looking to cover today. And hopefully by the end of the session, you'll be able to understand how to enter the market with a little bit more confidence as well. So before we go into that topic itself, it makes sense to recap what we've gone through in the previous sessions. So if you remember last week's session, we went through support and resistance. This is a specific tool that we have used before in terms of identifying structure in the market. And we actually identified support and resistance levels or key levels on the H1 and the H4, which are your sort of 1 hour and 4 hour zones. And then what we also did was we used that famous zigzag indicator that we have along with a support and resistance indicator as well. And so by the end of that session, you would have identified key areas or key levels in the market where you think price can potentially go from. And if you remember, we actually did like a full-on trading view replay mode as well, where we actually saw the trades, actually saw the market actually moving and actually reacting to these zones as well. So that was an absolute fire session. I really enjoyed teaching that one, and hopefully we'll have another fire session today as well. So without further ado, what are we going through in today's session? So what we want to do is we want to understand exactly what confirms a valid trade entry. So what that means is that we're going to avoid entering any random trades or entering based on emotion. And what we're going to look to do is apply a very simple entry checklist, which will be a few confirmations. And then what we're going to do is actually go back to TradingView and look over some key examples that have happened recently in the market as well. And you can start to identify whether these were very good trades or actually not so good trades. So it'll be interesting to see how we go on. Now, based on feedback as well, I think everyone seemed to really like the TradingView element, the idea of replaying the charts and identifying what actually happens, almost simulating what happens in the live market and how you would react at certain points. And that's what we're going to be doing a lot more of in these future sessions as well. So if that all sounds good to you, then obviously please put a thumbs up in the chat as well. And we'll go through what is an actual trade entry in itself. So what is a trade entry? So basically what it is it's a point in the market where you actually make a decision to enter the market, enter a trade. And that has got to be based on confirmations. Now, confirmations you have seen before in previous sessions where we've identified maybe a key level of support and resistance, or it's been a key Fibonacci level, or based on a particular candlestick pattern. If you remember, it was the engulfing candlestick pattern we were looking at. So these are all confirmations. And ultimately, when you enter the market, that's going to then determine how big your stop loss will be and also what your risk to reward could be as well. So if you don't understand what risk to reward is or stop loss, then obviously refer back to the previous sessions. You'll be able to understand that in a lot more detail. So what I want you to understand is that if you get a good entry in the market, then hopefully your stop loss shouldn't be as big. And also you might be able to increase what we call your risk to reward ratio. So what is an entry not? It's definitely not a feeling. You know, you don't want to be like, oh, I feel like this market's going to go up and then just place a random trade. No, it's not that. And, you know, you don't want to be like, oh, it looks like the market's going up. or it looks like it's going down, I'm just going to click sell. So that's the easiest way to lose money in the markets. What you want to do is that if you're seeing, for example, the market's going down and it just continues going down, what naturally happens as humans is that you start the FOMO effect, which is the fear of missing out. So you start thinking emotionally and thinking, I don't want to miss out on this sell here. It's a huge sell and it's going to keep going. So you end up actually entering the market. And what ends up happening is that as soon as you hit sell, what happens? The market will probably go against you and hit your stop loss. So we don't want to do that. We want to always base on confirmations. Now, I don't know if you've ever seen in the Telegram channel as well, sometimes you'll see the traders, they'll be like saying, oh, right, I've seen the market make a big move, but I'm going to wait for the market to come back to a key level where we can actually look to enter. So that's what professionals do here. They actually look at identifying a key level and entering the market. So this is like a little kind of checklist for you, and this is what helps you to avoid any sort of random trades in the market. So I'm trying to whistle through these slides quickly as possible because I want to get onto the charts, but it's very important that I go through this little bit of theory and you guys understand how this works, because if you don't, then you're literally going to be entering the market without any kind of instructions, and that's what we don't want. We want you to have a clear setup in mind. So ask yourself this always before you enter a trade. So you got to ask the reason why. So why am I actually entering this trade? And then based on that why, you'll understand, for example, what confirms this particular setup. So what confirmations are you basing your entry on? Okay, and then what you might want to also ask yourself is how many confirmations do you have? So let's say you base your trades on, let's say, 3 or 4 confirmations, right? If you have 4 confirmations, you might want to call that an A+ setup. If you only have 2 confirmations, you might want to not risk too much on this trade, okay? Now, also when you enter the market, it's very important to understand where is your stop loss going to be. Now, if you are going to trade without a stop loss, that's obviously up to you. In my experience, when I've traded without a stop loss, I've always blown an account. So the best thing to do is always use a stop loss. So, especially when the market goes against you, you got to understand how far are you willing to let the market go before you look to exit the trade. Now, ultimately, you also want to know where your take profit is as well. And what we've always taught in our education sessions is that we're always looking for a 1-to-1 risk to reward. So whatever your stop loss size is, you want to aim for a minimum, the same sort of size in terms of pips for your take profit. So what I mean by that is if your stop loss is 10 points or 100 pips, then your TP should also be 10 points or 100 pips for your risk to reward to be a 1-to-1. So if you can't answer any of these questions in 1 to 5, then please just don't enter the market. If you don't have your confirmations, don't enter. Okay. So what actually confirms an entry? Now, there's plenty of strategies out there, and you might want to take a screenshot of this one if you don't have it. We have gone through this in previous slides as well, in previous sessions. So it's not brand new news, any of this, but this is just a good way of identifying 4 confirmations in the market. So your first confirmation in terms of what we're doing in this particular strategy is identifying trend. So the way we identify trend is that we use the 50 and the 200 EMA. I'll remind you of that when we go into the charts. And if the 50 and 200 are in line, so the 50 is above the 200 and it looks like it's going in an upward direction, you could identify that as a bullish trend or a trend that's going up. Okay. Now, structure, what we tend to do is we use that zigzag indicator, the one with the yellow lines, and it's kind of identifying the key levels of higher highs and higher lows, or lower highs and lower lows. And what that does is that identifies you the most recent key high and low levels. All right. Then what we tend to do is we always like to draw a Fibonacci retracement. And that fib level that we tend to look at, the key one, is the 618 or the 61.8% level. As soon as market goes back to that pullback, then we look to try and enter the market once we've got confirmation. And that 4th confirmation is that bullish or bearish engulfing candlestick pattern. You guys will remember that from the candlesticks training as well. So for them 4 particular confirmations, does that all make sense? Just drop me a thumbs up if that makes sense. If it doesn't, then you need to refer back to some previous sessions, and then we will be able to hopefully get you back up to speed. So the best part now is going to be trading view examples. Now, if you want to, again, feel free to take a screenshot of this. This is where the meat of the session. I managed to go through that introduction in about 10 minutes or so. That's not too bad. So I've got more time, hopefully, on trading view. So what we're going to do is I'm going to keep this slide open. So what we're going to do is we're going to go back to the 7th of May, and we're going to go back in time in our time machine, and then we're going to see what we actually identified in the market. We're going to focus, you can see on here, on XAUUSD, and we're going to focus on the M5 time frame as well. You can see these entries that we had here, they were all around the M5 time frame. So that doesn't mean that we only have to stick to the M5 time frame. You might find setups on the 15-minute time frame, the 1 minute, the 3 minute. I've always said that I never go really much lower than the 5 minute in terms of particular entries. Okay, and most of the times of the trades you can see here, these were mostly around the London session, or there was also the London/New York session. So remember, London for us opens at 8 a.m. and New York opens at 1 p.m. UK time. And you often see a lot of movements in the market around that London or the London-New York crossover as well, and even into the New York session in the evening. And that's when we tend to have our afternoon traders on there. All right, so let's go. Let me see if I can get TradingView up and running. If you guys can just give me a thumbs up when you can see TradingView. You guys can see it all right? All right, nice one. Cool, so what did I say? I said 7th of May, right? So what I'm gonna do is I'm gonna get my little kind of go to, and I'm gonna go to the 7th of May if possible. Nice one. And then what I'm gonna do is I should have something circular. Okay, cool. So I'm gonna go into replay mode, and I'm going to start new, and I'm going to go around about this point here. So what I've done on here is I've actually kept what we call our EMAs on. That EMA, I might just make it a bit lighter if I can, because it might be a little bit, let me go for a lighter gray than that. There you go. That should help. There you go. Hopefully you can see that a little bit better now. So you've got your blue EMA and you've got your gray EMA on here. And this is 7th of May. This is like coming up to what, 7 in the morning. Some of you might be awake, some of you might be having breakfast, or might be still asleep. But the idea is that you're looking at this market here, you wake up in the morning and you're seeing this. So what are you seeing on here? You still got your zones on here. So these are the zones from that indicator that I mentioned. It was the Fluid Trades SMC Light, and I've also got support and resistance on there as well. You don't necessarily need these on there, but I like to keep them on because I like to just see where key levels were in the market. So at this point in time, what are we seeing on here? So you're seeing that the blue EMA, this little line here, is above the grey EMA. So you can identify that this is a bullish trend at the moment. Does that make sense to everyone? Does everyone agree with that? Confirmation number one. Yeah? Confirmation number one. Anyone? Yeah, okay, cool. I just need one thumbs up. That's all good, right? So we're in an uptrend at the moment. So what that means, and it's not the most clearest of uptrends. And what I mean by that is that you're not seeing a series of higher high, higher lows, higher high, higher lows. So when you are normally drawing a classic uptrend, you normally see something like this, okay, where the market's making a series of higher highs, higher lows. But this is reality. You're not always going to see it exactly like that. And you can see in here, like especially in the evening time, there's a lot of what we call consolidation here in the market. But overall, the EMAs are giving us that little bias there that we are potentially looking for buys in the market. All right. So I'm just going to let this play out for the moment. And you can see, like just before London opened, there was a huge move to the upside. All right. So at this point in time, I'm thinking, okay, so I've got a potential low here and I've got a potential high here. There could be a potential pullback. So let's keep going. All right, so now the zigzag has been drawn. So what I can start to do now at this point, before I've even entered the market, all right, imagine this is what, 8, 9 in the morning. I get my fib and I draw it from low to high. There you go. Okay, so at this point, I'm looking and I'm thinking, okay, is there much of an entry at this point? Okay, so what happened here was that I had a pullback to what's called the 50% level, but I didn't have a pullback to the 618. Okay, so therefore there's no trade. So, and it looks like market's bounced off it. So what I'm going to do is I'm going to now move this potentially to there now, to the new low that's been created. And I'm going to see where the new high will be. So let me have a look and see. Okay, so at this point in time, we're on the 5-minute chart, but I don't really see a new high being created. So what I'm going to do is I'm just going to reduce to that particular level there. Okay, so these gray lines at this point have shown you that we've got a low, recent low and a recent high. And what's happened here is that, can you see at this point, I'm just going to remove the EMAs for now, and I'm just going to try and keep it as less busy as possible here. Whoops, I need that one. Okay, so just remove the EMAs. Okay, great. So at this point in time, what I have is I have a low, I have a high, and price, what we can say here is that it started to wick this 618 level. Okay, the 618, the green line is my 618, all right? So what happened here is that I'm now waiting. So now that the market's done this, it's wicked this. What I mean by wick is that there was no body underneath here. It's just the small candle wick, 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 and there's no engulfing pattern apart from here. Can everyone see that engulfing pattern in the chat? Just drop me a thumbs up that you can see that. Yeah, so the blue candle is bigger than the red, all right? I've got what's called a rejection from the 618 level. The only thing I don't have is I don't have a clear higher high, higher low pattern. The only bias I am going with here is that my EMAs are in line. So the aqua line here, this one is like a light blue, is bigger than the gray line, all right? So my confirmation is that my EMAs are up, okay? I have a 618 level touch on the most recent high and low level, which is there, okay? And I have an engulfing candlestick pattern. So I'd call that maybe a B setup, okay? Now, what I want to do at this point here is that I would want to enter as soon as this candle closed, once that engulfing candlestick formed. So I'm going to put in a long position. Remember how to do the long? We go onto the left-hand side here and we put long position, all right? Now, what we're going to do here, I'm just going to remove that fib level for now, just to try and make it as simple as possible. And what I'm going to do is I'm also just going to remove the zigzag line as well, and I'm going to just remove the EMAs. So I just want to try and keep it as simple as possible on the chart. Now at this point here, you're going to draw your chart and you're going to aim for at least a 1-to-1 risk to reward ratio. Now in terms of the stop loss, you want to look at previous lows. Now the most safest place to put your stop loss is there. Now can everyone see why I would put my stop loss there? Because this was a low, this was a low, this was the most recent low here. And the size of this stop loss is 15 points. Can everyone see that? Can anyone see why I would do that? Yeah, all right, cool. Now, and I want to target at least a 1-to-1 risk to reward. So if I'm risking 15 points, which is quite a big stop loss, I want to also make sure that I'm looking to take profit at a 1-to-1 risk to reward ratio. Now this is a good place to take profit. And the reason why is because it's a previous high. Yeah, can you see that high there? That's the highest point in the most recent candlestick behavior. Okay, so what we can do is we can just literally let this play out. So if I play this out, let's see what actually happened in the market here. So the market retraced. Everyone's probably getting nervous here or sweaty at this point. And then market eventually kept moving. I'm just going to drag this up. And did it hit TP? Yes, it did. So it looks like it eventually hit TP. It went to as high, almost as high as that certain point there. And you would have made money in this trade. Can everyone see that okay? It was not the most clearest setup. It's not the best setup, but I'm hoping you guys can see that. What did we have? We had the bullish candlestick pattern. We had the EMAs in our favor, looking for a buy, yeah, and we also had the most recent high and low, and we had my fib level. Where's my fib? Oh, I bloody deleted my fib level, didn't I? So let me just draw my fib level back. It was this one here, just there. So we had a recent rejection of the 618 level. So it was not a bad trade. I wouldn't say it was the best trade, but it was not a bad trade. Yeah, should we keep going? Where are we up to? 8:20. Well, we're good for time. All right, so cool. So I'm gonna let this one play out now. And there was actually, I don't think there was any more trades, but there might have been more potential setups, but I chose not to have a look at any more on this particular day. So we're gonna move on to trade number 2, which was actually happening on the next day. So I'm just gonna quicken this up a bit. So I'll let it play out, let it play out. Can you see how the EMAs are now changed? Now they're actually in a downward trend here. Yeah, so and then it changes again into an upward trend. So let me just go a little bit slower here, a little bit slower, and we're just going to pause it just there. So at this point in time, again, this is not the most clearest setup or anything in the world. At this point in time, you're coming into Friday morning, 8th of May. Again, a lot of consolidation throughout the night, a lot of zigzagging between these two zones here. Everyone see them zones? I'm hoping you guys can. Hopefully support and resistance might help. So the blue and the red lines here. So can you see that there's like where's my little rectangle thing? So you can see there's a zone here. If I just clone that, you can see there's another zone sort of playing around here. So market sort of playing, bouncing between these two zones. Yeah. So at this point in time, the EMAs are not really giving me much, right? They're kind of tight EMAs. So what we say is there that the market is potentially consolidating here as well. And you can see, because look what's happening with the candlesticks. They're sort of going up and down, bouncing through the EMAs. Can everyone see that? Yeah. So what we call a lot of consolidation at this point. But I'm going to still draw my most recent highs and lows and see if there's anything in the market that we can see. All right. So again, we've got a recent low and we've got a recent high here. Okay. Not the greatest. You know, the EMAs are telling us that we're potentially looking for a slight buy bias here. Now, at this point in time, we've got one low and we've got one high. So shall I draw my fib levels and see what we have? Now, by all means, at this point, we've not seen an A+ setup, one that's really clean. And here, we can see at this point here, what can we see that's in our favor here? The EMAs, first of all, the blue is above the gray EMA, which means that we're in a slight buy trend here. Not the greatest though. So it's not like my most best trending market, all right? What I see is that from the recent low, recent high, does the market even touch the 618 level? I would argue and say probably not. I mean, it gets very close. It almost wicks it, okay? So I haven't quite got my 618. So again, probably a cross on that one. The only thing I do have that's in my favor here is that I've got the engulfing candlestick pattern. And these long wicks here give me an indication that there's a bit of a rejection around this particular area. And when I look back, I can see there was a rejection here because there's a lot of wicks at this point. Can everyone see that? Yeah. So if I'm entering this trade, I'd probably enter this with very low risk. And what I mean by that, I'd probably reduce my lot size or reduce the number of entries I have on this one. This is probably not going to be my best trade on this, okay? But that's what I'm aiming for. Let me see. Let me just, again, put my stop loss and take profit in here. Can everyone see this, by the way? Okay, I'm just going to just pause there for a second. Can everyone see what I'm looking at here? And if this is making any sense? Because obviously the last thing I want is that you guys are not understanding this, all right? Cool. So I'm just going to remove my little zigzags. I'm going to remove the support and resistance for now. I'm going to remove my EMAs for now. Just keep it as simple as possible. And I'm going to look to put in my long position on here. Again, I wouldn't call this an A+ setup, but this is the reality of trading. You're not going to get an A+ setup every single day. Okay. Now, in terms of where would you put your stop loss in here? Again, you've got a, let me just move this out of the way and just zoom in a bit so you can see it. Come on, Amrit, a little bit quicker. So can you see on here these wicks? I want my stop loss outside of these wicks. I don't want my stop loss to be literally where price has been before. I want it to be out the way. I would also want it to be out of the way of these wicks here. If you're being ultra cautious, you would probably even go as far as around 15 points again and get out of this recent low. All right. Now, because I said I would probably not be risking that much on this trade because the markets were consolidating a bit, I would probably go outside of this potential area here. All right. I'm going to keep these fib levels on. Okay. And I'm just going to extend it a bit on here. Okay. Now, the great thing on this one is that we risked quite small. We only risked about 5.75 points on it, 57 pips. That's all we risked. And we already hit a 1-to-1 risk toward ratio anyway. Yeah, 1-to-1 risk toward ratio is here. So you've made around almost 6 points on here. Now, remember for us, we're always going to be targeting previous highs, which were these ones here. And luckily for us, if we were putting our target around here, we would have seen market hit our target. But let's just let this play out and see what actually happened. So I'm going to keep going on here. Keep going, keep going, keep going. Okay, so what I'm going to do is I'm going to bring my EMAs back in and I'm going to bring in my zigzag indicator. Now, can you see at this point here that we've clearly managed to hit our previous structure? Now, actually, this trade went on to hit a 1-to-2 risk toward ratio. So what that means is that for your risk of 5.75 points, you've actually made almost 12 points on this trade. So that is a decent trade, a very good risk toward ratio. Now, if you were being very bold and wanting to go even higher for this particular target here, okay, you probably would have taken some what we call partials at this point. You know, when they say you aim for TP1, 2, 3, and 4, you probably would have hit TP1, TP2. At this point here, you probably would have gone break even with your entry and you would have probably been taken out at break even around here. Yeah. Does that make sense? Everyone see that trade? I hope you guys do. Now, I've stopped it here. And the reason why I've stopped it here is because you might have seen all this this element played out on here, okay? But that key level that we drew, so I'm just going to just delete this for now. That key level, that 618 level, do you not notice that there was a lot of wicks at this point here as well? It's what's called it's going to be a fairly key support level. And what happened around here? Can everyone see that? You've got your same fib level, and can everyone see that engulfing candlestick pattern here? So you've almost got what's called a re-entry. Your EMAs are still in favor. Your blue EMA is above the gray EMA. You still got your engulfing candlestick pattern, and it's still at that 618 level that we drew previously. So you could potentially have a re-entry here. All right. So let's say you did another re-entry at that point. Okay, let's put this entry here. Stop loss, I'm going to put outside of this previous low. Have you guys noticed I'll always give it a little bit of wiggle room as well? I don't put it like literally just where the previous wick was. I give it a bit of wiggle room. Yeah, I give it a little bit of extra space. If it decides to hit that stop loss, so be it. I don't care. And that's how you should be entering trades. You should enter the trades thinking that I've already accepted that I could potentially lose this trade. All right. Now my previous high is around here. That's where my target's going to be. So let's just see what happens. It's a potential re-entry. Let's see if market plays out. Oh, okay. I didn't know that happened. But that looks like it played out very nicely for us. And just to bear in mind as well, this is about 125, around 130 on a Friday. Now, if I remember correctly, this could have been some major news that could have driven that potential high. But can you see something on here? Look where market retraced down to. Can you see that wick? It almost went to our stop loss. So that's why I always say, give it a bit of wiggle room, give it a bit of space to breathe. All right. So far, so good. We've not even seen an A+ setup yet. But guys, are you getting some value out of this? Is this really helping or not? Because just let me know. I can always go back to slides if you want. Yeah. Cool. So where are we up to? 8th of May. All right. So let's just let the markets play out now. My next example happens to be on the 12th of May. So let's carry on going through. So we're going to enjoy our wins. For a hypothetical win, sorry, because we're not gone back in time. If only you could go back in time and place these trades, eh? The great thing is that you can actually learn from history, right? This is what we call history lessons. All right, I was never good at history either. All right, so 11th of May, so we're ignoring 11th of May. This is the only history that I care about, isn't it? Knowing what happened in the past so I can plan the future. Cool. So letting the markets play. Let me just make this a little bit quicker for you guys. I know how impatient you guys can get in the markets. So coolio. So I'll let Monday play out. So just a bit of FYI as well. You know, like with Monday, when the markets open on Monday, it's often not the best day to trade because the market's kind of deciding what to do. And if there's any potential news over the weekend, you know, it's never, I always find Tuesdays, Wednesdays, Thursdays as my better days to trade because it's almost like the trend has been set. Like if you see on here, like on Monday, for example, like the market made a big move to the upside and all of a sudden it's gone from a downtrend to an uptrend. All right. But then at the same time coming onto Tuesday, now we're switching. It's almost like the market made a big move up and now it's kind of making its way back down again. So where are we now? We're on the 12th of May here now. So what's happening here already is that once we're coming into Tuesday morning, we can see the EMAs are going down, sorry. So I'm starting to see a recent sort of downtrend appear on here. So there's a potential, I'm looking at a potential sort of a recent low or recent high. Okay, so now we have a recent low, a recent high. Are we gonna draw anything on here? Are we getting somewhere? Okay, cool. So what I'm going to do at this point, it hasn't drawn just yet, but at the moment I can see from the fib level, I can see from high to low. That's where I'm looking at the moment. It just hasn't quite drawn on the zigzag yet. It probably will draw any moment. There you go. So at this point in time, I've got a recent low. Sorry, my recent low was here and my recent high was here. All right, so I'm drawing from high to low because we're looking for a downtrend. Okay, so high to low, that's your high, that's your low. Does market retrace? So market has retraced to the 618 level. Can everyone agree with that? Yes or no? Can everyone see that we've got an engulfing candlestick pattern here? Yes or no? We can see that the red candle is bigger than the blue. We are good for a sell at this point. All right. Now, for those that like to risk fairly small, your stop loss would be placed just above this particular entry here for about 9 points. Okay, your previous target, so for a 1-to-1 risk to reward ratio, maybe just slightly above 1-to-1, we're going to be targeting this previous low here, and that's your entry there. Okay, for those that wanted to be a little bit more safer with your trade, you might want to put your stop loss above your previous high just there. But then what happens is that you're in a negative risk to reward now because you're risking more than you're prepared to win. All right, so if I just keep it on that small stop loss just there for about 9 points, let's just see if this played out or not. Okay, so it actually played out instantly within a couple of candles, that one did. So, and then you probably would have been out at around break even there, unless you had any more targets to aim for. Would you have had any more targets to aim for? Yeah, so there's previous lows here, so you could have potentially extended this trade going as far down as here, but that is like a 38 point move. That's a 300 pip move you're looking for, and I don't even think that it played out. Let's have a look. Oh, okay, maybe it did. Oops. So, okay, that was a great trade, that one. And it would really help if I actually went through this beforehand, right? I would have known what was happening. But that was a decent trade, okay? But what confirmed that trade for you? What confirmed that trade? That's what you got to ask yourself the question. You had, where's my zigzag gone now? Let me just, I might just refresh my page a second. What was it? 12th of May, yeah? Let me just refresh my page. Just bear with me 2 seconds. But you got to ask yourself, what confirmed that trade entry? That's what you got to ask yourself. So let me refresh. Just bear with me 2 seconds. Let me get back to, was it the 12th of May? I think it was, wasn't it? There we go. So that's where we were. So what confirmed that particular entry? I might have to take my replay mode out again. We had the EMAs in our favor. The blue EMA is below the gray. We knew we were looking for sells. We looked at our most recent low, which was this one. Most recent high and most recent low. We knew we were looking at the high and the low. We drew our fib level. We saw the 618 level. And do you know another handy tip? Okay, a bit more extra confidence for you on this one is that, do you see where the fib level was, that 618 level? It was very near the blue EMA. And the blue EMA, I want you to really write this one in your notes because I haven't got it in my slides. The blue EMA and the grey EMA are what we call moving support and resistance. So what I mean by that is that these EMAs can often act as magnets. And what it means is that you'll often see that price rebounds off these EMAs. All right. Now, you're not going to see it all the time, but I mean, just look at what happened, for example, there. Price turned immediately at that 200 EMA, the grey one. Price turned at that blue EMA just there. So just something to bear in mind, not all the time, but you'll see often that is an extra strong confluence there that you could be entering a trade and hopefully potentially making money from the market there. Cool, nice one. So let me just get my replay mode back on, and my next trade is actually on the 13th of May. Getting some value out of this so far? Can you guys see what I'm looking for? Yeah, is it good? Cool, lovely. That's what I want to hear. So I'm going to get my replay. I'm going to come back onto this level here. So with these examples that I've mentioned, there are a couple of rubbish ones in here, and I'm kind of just waiting for them rubbish ones to appear. I think we had one, didn't we, where the emails didn't quite hit. So we are on now the 13th of May, because look, this is not going to happen 100% all the time. If it was a 100% win rate, then, you know, that would be amazing. But the reality is it's not. But it's tipping the edge in your favor. That's what you got to understand. If you can take that away as one key objective, that's what you're looking to do. So 13th of May, what's really happening at the moment? This is just a whole load of mess. Like, what is this? There's like no downtrend, no uptrend. The EMAs are very close together. This is just very, very messy at the moment. All right. So I'm still I'm looking at recent high, because the EMAs are below, like the blue EMA is below the gray. I'm looking for a downtrend potentially here. So what's happening? Okay. All right, cool. So now at this point in time, like nothing really happened during London session here. So you might have heard, like sometimes you might hear Kay say that as well, like, oh, there's not much movement happening in London session. We'll wait to see what happens when New York opens. And this is exactly one of them examples now. So you've got the EMAs here. Now straight away, what I'm looking for is, again, I'm getting my fib level. I'm looking recent high to recent low. All right. And this is a key area where I'm looking for potential engulfing candlestick pattern to occur. So obviously I've circled it, which means that there is one that appears here. And look at that. Damn, I've already gone 2 candles ahead. I'm sorry, I blew it away. But what I want you to see on here is, again, look at that magnet, the blue EMA. The engulfing candlestick happened when the blue EMA crossed through it, but also it hit the 618 level to the T. Okay, so let me put a short position in this point here. And then my stop loss is above the previous high, which is just there. So this one's quite a small risk. It's only 6.79 points, which is 67 pips. All right. Target, previous low. We knew we already hit that one already. Okay. So that one actually was a decent trade. If you were looking to really milk the market on this one, previous low is all the way down here. I don't think it would have hit that one, but you can see what happened here. So you would have been taken out of break even anyway at that point. So you would have at least taken profits at a 1-to-1, which is here. So at a 1-to-1 as a bare minimum, as soon as market hits that particular level there, 1-to-1, you're taking something out of the market and you're moving your stop loss to break even. Worst comes to worst at the point, price is going to hit your TP or it's going to hit your break even. All right, I've just given a massive nugget there and I hope you guys caught that, but I'm going to say it again one more time. When your trade hits the 1-to-1 risk to reward ratio, take some profits out the market. Take some profits out the market. Then you have your next target, which is your previous low here in this instance. If it hits your target, in this case it did, great. If you had a third target, which is all the way down here, then you would have had your second target potentially here. You would have taken some more profits and let the rest of it run. All right, and even not just in break even, I probably would have moved it slightly ahead into profits. So you're always going to end it in profits. That's the best thing, right? When you enter a trade and you've already made money from the markets, your stop loss is in profit, and you just let the rest of it ride. It's either going to go even further down further in your favor, or it's going to stop you out at your profit level. All right, we're good. We're good. So I'm on to my last couple of examples here. It's 8:40, so bear in mind that we might go a little bit over on this session, but I hope you guys don't mind that. I just feel like this is quite good value for you guys. So I don't mind just going about 5-10 minutes over if that's okay with you guys. Let's see how we get on now. So I was going to move you now on to one trade for Thursday, one trade for Friday, and then we'll wrap up with some last little bit of theory, and then I'll open up for a Q&A for a bit as well and see how you go. But I'm hoping the more examples you see of this, the more it will help you to understand the confirmations. Now, you don't have to take exactly all the confirmations that I'm telling you here. You might find your own confirmations, and that's something that we'll go through in future sessions on here. So let me just pause the market just here. So the 14th of May, now this is Thursday. This is only just like a few days ago, yeah? So at this point in time, I'm looking here at the market and I'm seeing that at the moment, the EMAs are slightly above here, all right? So I'm going to just let the market play out a bit, let the market play out a bit. So if, for example, like, I'm not seeing any engulfing candlestick patterns here. I'm not seeing, the only engulfing candlestick pattern I see is just there, but that retracement would have been from potentially this low to this high. Now, if I was to draw that, just going to show you an example where this does not meet the criteria. Now, the 618 level was here, but this engulfing candlestick pattern happened a lot lower down. All right, so it actually broke that 618 level. So therefore, there's no valid trade for me there. All right, so I'm just gonna let this play out. Let this play out. Let's see what New York brings, because it doesn't look like there's much company happening here at the moment. All right, so New York session is now open, and let's see what the EMAs are saying for us here. Okay, there's a bit of a crossover here at this point. Now, can you see here around New York session here? This is about 2 o'clock here. There's about 2:30 here. Now, 2:30, just to let you know, that's when the indices open. So that's your stocks, okay? So SPX, NAS 100, US 30, they all open around 2:30. So you do tend to see a lot of volume, especially in the stock indices around 2:30. And that can often have an effect on gold as well. So there's been a big move here. Can you see like market was kind of zigzagging between this particular area and this particular area here? But there was a break of structure just here, which is where it says there, break of structure. And now I've got a key, recent high, recent low, and my EMAs have just crossed over. So it's not the greatest, but do we have some kind of pullback on here? Let's have a look. So I'm going to draw my recent high, recent low, and let's see now if we see, can you see my EMA is lining up there as well? So is it going to pull back to that EMA, pull back to that 618 level, give me engulfing candlestick, and then off we go. Let's see. So at this particular point, this engulfing candlestick pattern, I don't like that much because it's not like, it's a very, very small candle body there. But it is, by all means, by definition, it is an engulfing candlestick pattern. So you can enter the trade there. The EMAs are very close together. That gray and that blue are very close together here. So it's not the best downward trend, but by all means, it is a small downward trend. So you could enter this market. Again, for me, I wouldn't be like putting my house on this one, put it that way. But I'm still going to go for it. And I'm going to put my stop loss there just above the recent high. And I'm going to target at least a 1-to-1 risk to reward ratio, which is just there. And in fact, I'm going to move my overall target to be at this recent low here. So we can see whether this plays out or not. Considering that, looking at this market here, it looks a bit what we call choppy here. There's no clear upward or downward trend on here. And we can see that, did we hit a 1-to-1 risk to reward ratio here? 1-to-1 was just there. So we did hit a 1-to-1 risk to reward ratio. So that's good. Did we actually hit our overall target? We can have a look and see. It's close, it's close. Oh, don't play with me, man. Don't play with me. Did it hit it? It hasn't hit the target yet. Oh, eventually it did. Just there, eventually. And you know the great thing about this, what I want you to understand on here, can you see, I'm going to remove this drawing for a moment. Can you see that the EMAs are getting wider here? Can everyone see that? The EMAs are getting wider here. Now, the great thing about that is that that's an indication that this downward trend is getting better, or downward trend is getting stronger when the EMAs tend to widen like that. So this is good. And now this is going into Thursday evening, and this is going into potentially into Friday, and Friday is looking juicy. By the way, that trade was fire, man. Woo! Should I just go back and see what got played out there? That was insane, because the previous structure was down here somewhere, so it wasn't actually far off from hitting that, by the way. Damn. Yeah, oh my goodness me. Okay, so that was actually quite a decent trade, that one. We caught that move literally from all the way here, all the way down. That literally smashed everything. All right. Oh God, we've got 2 entries here. Nice. So coming into Friday, you're waking up on Friday now. What time is this? Like in the morning. I'm like, this is as clear a downward trend as you're going to see. This is literally, someone could have drawn this, man. This is crazy. Can everyone see how that downward trend is? So what we're looking for here at this point is we're looking for some sort of retracement to the 618 level. But what do we get on here? Now, what we have on here is that we've got a very strong downward trend here, because the blue EMA is very much far away from the gray EMA. Price has literally respected that blue EMA pretty much since around when we started down here. Price stayed pretty much majority below the blue EMA here. So we are in a strong downward trend. We're trying to just catch a pullback. That's all we're trying to do here. Unfortunately, we didn't get it, because that's your previous high. That's your previous low. Okay. And unfortunately, price did not come back deep enough to our 618 level. All right. So we did not have that confirmation before trade here. So if you did want to enter at this point, we are missing one of our confirmations, which means that it's not an A+ setup. However, because the downward trend is so strong, I am very much in favor of this trade. And also because we've got a moving support and resistance with this EMA, I still favor this trade to go in our favor. So let's get the short up and let's enter the trade. Again, targeting previous structure. Stop loss is outside the previous candle wick and also above the EMA as well, which is acting as another resistance level. So let's see if this played out, yes or no. It definitely hit 1-to-1. It hit our target. Bam. So this is great, but remember we did not have our full confirmation because we did not have the 618 level. So this would have been a low risk trade, a B setup if anything. All right. So let's see what happens now. Do we have another potential downward trend here? So I'm going to draw my fib level once again. So even though your zigzag hasn't drawn yet, remember it takes a couple of candles for it to confirm the the actual point at where the market actually changed directions. So at this point in time, this is what I'm looking at. All right. So imagine on a Friday, our lunchtime, I'm looking and I'm seeing, does market retrace? And you know what? It's so annoying because you see an entry there and you think, ah, damn, it didn't quite get to the 618 level. It didn't get us quite what we wanted, but that would have been maybe a B setup there. All right. Because it retraced back to the 50% level and it's a B setup. And that would have actually even hit TP as well, stop loss in that instance. So this is the one that I have here because the market came back. Remember what we said, we wait for market to come back to us. I am very aware that we are over time here, so I appreciate you guys staying on this session with me on this Sunday evening. But you see, it's not the clearest engulfing candlestick pattern just there, but this one here is a clear engulfing candlestick pattern. And the other thing is that we can see previous structure is just there as well. So short position is just there, stop loss above previous high, and I'm going to look to target my previous low here. This is actually over a 1-to-2 risk reward ratio. This is a sick trade if this plays out. I know for at least 1-to-1, I'm going to grab something from the market here, which is around just there. Okay, so I'm going to let my trade play out and let's just see what happens. You know, the thing is at this point in time is that you've got confirmations in the market. That's all you got to understand. You've got confirmations. You're trading off confirmations here. So close. And then there you go. It's hit your TP, your previous structure. All right. How did you guys find them examples? Were they good? I hope they were. Let me see where this actually ended up finishing. Did it actually go to any previous structure or not? It actually would have taken you out of break even. All right, but guys, I really hope you found value out of that. I will try and wrap up fairly quickly going forward from here. So just to let you know some other confirmations that you could use that we've not talked about yet, and we will talk about in future sessions. Session timing. Did you notice that we were looking at London and New York, especially the London-New York crossover? Did you know that we didn't even look at news for our confirmations? But you can also identify that if there's any major red folder news, you might want to just wait for that news to play out to see where the market hits a particular direction or gives you a new high or new low. So additional indicators you can use as well. So we've got, for example, RSI, you might have heard of that. That's another indicator we can use, if we can look into that. Another one that I potentially use is something called VWAP, which is another form of like a moving average. The idea is that I give you about 3 or 4 confirmations there. The more confirmations you have, the stronger the trade. However, you're going to end up with fewer trades because if you've got like 10 confirmations, that might be a sign that you're maybe waiting for too many things to go your way. And the chances are you might only see that like once a week. So it's very important that you have enough confirmations. I would say at least 3 to 4 minimum confirmations before you enter a trade is what my recommendation is. So entry mistakes, entering without enough confirmation. So you look to force trades there, and you can see even some of the live examples I went through. I did force a couple of trades there because I only had about 2 or 3 confirmations. All right. You don't want to be jumping late. Once you see the market already trending in a certain direction, don't start jumping in late. Wait for market to come back to you. Okay, so entering at not at a key level. So you want to make sure that you're entering near a key level in the market. For us, it's that 618 level has been absolute fire. So trading out of boredom, don't just take a trade for the sake of it. Like, wait, there might be days where there's no trades. That's fine. You got enough signals in the chat. You're always going to have enough trades. Yeah, these are just extra. So, and also the other thing is that people think that the more that you're trading in the market, the better you're going to be. No, sometimes less is more. All right, so sometimes just waiting for that A+ setup is the one. That Friday setup that we just saw was enough to for the week, you know, if you've got enough lot size on that particular trade. Sometimes the best traders are the ones that maybe look for 2 or 3 setups a week and that's it. But you might see this setup more than often. And the idea is that I want you to go away and actually look at the charts and do basically what I've just done. You might not have the replay mode, that's fine. But as long as you have basically trading view available and you can look back in time on the charts for yourself and identify them setups. Yeah. So key conclusions and takeaways from this session is hopefully you've seen how we look to enter a trade using some confirmations. Hopefully you can look back at the charts and identify some potential setups in TradingView. I'd like you to probably write some down and maybe we can go through some in the next session. hopefully you know where to put your stop loss and identify your risk to reward as well. And obviously making sure, just reinforcing that we're not looking to chase price, we're not looking to overtrade, and we're not looking to force any trades in the market where there's not enough confirmations. So I always like to finish on a little quote, and this quote here is that professional traders wait for the market to come to them, and when you wait for the market to come to you, that's when you hopefully tend to see the magic happen. It doesn't happen all the time. Like, there'll be some trades where you will hit stop loss. As long as you accept the stop loss and accept your risk beforehand, you're going to be a better trader out there. Coolio. So next session will be a little kind of almost like a breather, not a breather, should I say, but it's like looking back at what we've done, putting it all together, everything that we've learned in these last few sessions, and going through some many more examples, I'm sure, as well. I really, really appreciate your time, and I hope you guys found some good value out of this session. It's actually gone from daylight to nighttime now, so I need to put my light on as well. But hopefully you guys can still see me okay and hear me. But yeah, without further ado, I really wish you a great Sunday, and I hope you have a good week in the markets going forwards. Look out for them signals, look out for the charts. Like, even if you're not comfortable with what you've seen today, just look at the charts and just identify recent highs, recent lows, identify the 618 level, identify the EMAs, are they an uptrend or downtrend, and hopefully you'll start to see some setups come next week, and we can look to go through them in the following session. But thank you very much once again. Take care and enjoy the rest of your evening.